Bitcoin needs key $75,000 support to avoid price drop amid macro concerns. Bitcoin risks more downside if it loses a key $75,000 support amid growing concerns over a potential trade war between the United States and China. Bitcoin's BTC price has fallen more than 6.5% during the past 24 hours to sink below a low of $78,197, which was last seen on November 10, 2024, Cointelegraph Markets Pro data shows. Analysts attribute the current decline to macroeconomic concerns related to a potential trade war between the U.S. and China caused by U.S. President Donald Trump's decision to impose import tariffs. BTC/USD, 1-year chart. Source: Cointelegraph. These macroeconomic concerns were the main reason for Bitcoin losing the $80,000 support, according to Ryan Lee, chief analyst at BitGet Research. The analyst told Cointelegraph. Bitcoin's drop below $80,000 amid investor fear from Trump's tariffs and market unrest, points to a correction likely hitting $76,000 to $78,000 this week, nearing $75,000 as a key support level based on historical patterns and trader sentiment. Still, some analysts are concerned that Bitcoin's correction may see the world's first cryptocurrency revisit $70,000. Based on its correlation with the Global Liquidity Index, Bitcoin's right-hand side, RHS, which marks the lowest bid price someone is willing to sell the currency for, may fall below $70,000 around the end of February, after it peaked near $110,000 in January. GMI Total Liquidity Index, Bitcoin, RHS. Source: Raoul Pal. The first warning of a correction to $70,000 came from Raoul Pal, founder and CEO of Global Macro Investor, in a November X post, which also predicted that Bitcoin will reach a local top above $110,000 in January, before heading into the current correction. Related, alt season 2025, most altcoins won't make it, CryptoQuant CEO says. Can Bitcoin hold $75,000 support to avoid a plunge to $70,000? Despite the poor investor sentiment, Bitcoin seems unlikely to fall to $70,000 before the end of the week. Given continued dip buying from large institutions such as Michael Saylor's strategy, a plunge to $70,000 seems less probable without significant new downside catalysts, said Lee, adding. A further plunge to $70,000 is possible but less probable by March 2 without a significant new shock. The $75,000 level aligns with technical support and stablecoin buffers, while $70,000 would need sustained panic or macro deterioration beyond current pressures. Bitcoin Exchange Liquidation Map. Source: CoinGlass. Still, a decline below $75,000 would add significant downside volatility by triggering nearly $900 million worth of leveraged long liquidations across all exchanges, CoinGlass data shows. Related, Nvidia slump and $100 billion crypto IPOs could fuel Bitcoin rally. However, Bitcoin's current correction may last another 2 weeks, based on historical chart patterns analyzed by crypto analyst Rekt Capital. Bitcoin is in its first price discovery correction, wrote the analyst in a February 27 X post, adding. Depth-wise, this current -25% price discovery correction has been shallower by standards of history, though still quite close to the -30% mark. Duration-wise, however, this 11-week pullback has been more in line with 2013 duration. Source: Rekt Capital. Assuming that the current downtrend will mimic the 2013 correction, Bitcoin may face 2 more weeks of downside pressure. Magazine: BTC above $150,000 is speculative fever, SAB 121 cancelled, and more. Hodler's Digest, January 19 to 25.